All right, everybody. A very good morning to the New York traders and a good afternoon to the London and Europe side. What we are seeing right now is a classic risk off environment with the safe haven yen is leading the pack in FX side with the pound being the weakest currency. And there is clear reasons behind the pound being the weakest. And if we look at the latest CPI report coming out from the Great Britain, overall, it was a nice pop to the upside with the inflation year of year clearly beating the expectations, hitting 3% and from previous 2.5%. Uh, Month on month also came better than expected, but there was a problem with this data, and there was the services month on month and year of year coming in softer than expected. We well aware of that Bank of England is clearly pointing out that they are really worried about the service inflation. I know that we can't see service inflation right over here. If I just show you, let's just go to the Brent pound and the service inflation. So so it ticked up from from 4.4% to 5%, but it was below the consensus. So that was really hit at the pound, and with that, we are clearly seeing pound being the weakest, and the yen is being the first strong, and the second strong is the Kiwi. And for the Kiwi, I think all the reason goes back to this rate decision we had last time, and and the and the and the thing is that what attracted the market to buy on the Kiwi is that they have moved their neutral, even though they have moved their neutral rate from a previous report, which was released on November, stating that they're gonna get to 3.1 neutral rate by the end of by the start of 2027, and now they are estimating that they're gonna get there way faster by the end of this year, stating that they're gonna get 3.1%, which is even though it seems dovish, but it is not dovish because the market has been already pricing in uh, 100, close to 100 or 110 basis points of cut, which eventually end up staying at 3.1%. But the major key point was from this data is that they did not shifted their neutral rate. They're saying that they're gonna stick to 3.1%, even though they're gonna get there quickly, but they're not gonna go beyond or below these numbers. So this thing eventually helped the Kiwi to lift up from the last session. First we had seen a nice pop to the downside after the release, and then after that all paying all the losses and making the strongest currency during that time. So Swiss franc, Aussie, we haven't had anything much. Dollar is just waiting for those tariffs, and on the calendar side, we are not having anything particular from the US side. Canadian, nothing specific, and Euro is being the weakest. Clearly, uh, there are some fears after the comments coming out from Ukraine, Zelensky, saying that he is not willing Uh, to reach at a peace deal if they're not gonna talk to them first before United States of America. President Trump just directly talked to Putin, president of Russia. So there was something really waiting on the Euro side, and that is also clearly sign after those commentary we are seeing a risk of environment. Equity is just getting hit by that. Currently, Euro 50 and German 40 is clearly got hit with those comments that the peace deal the market is currently hoping for is not reaching, and it seems like that is just gonna get faded. So with that, moving to the commodity section, oil is doing its own thing, up by 1%, and you look at the silver is down close to 2%, and clearly we don't have any reason for this move. It's just on its own. And if we look at the gold has been trading at close to previous all-time highs, and there are some articles stating that it can hit to 3000 level, but I think we can see some pullback before, even though it breaks above, and it all depends on the macro or geopolitical side, that where these politics or these tensions land. Yields doing yields, there isn't much going on, just like with the dollar. There is very little from the US side today. Of course, we're gonna have uh, tomorrow labor unemployment claims, and the major event for the week is flash services and manufacturing PMIs coming from Euro, UK, and US side. Of that can lead some of the pairs to up or down depending on the outcome of that data. But geopolitical tensions, tariff news, and a very light calendar is clearly giving yields no place to go. It's just consolidating around about there. So that was a quick sentiment video for today. And if you have any questions, don't hesitate to let me know.